So, this December, the Federal Reserve is facing a huge decision, one of its most important of the year, really. They have to decide whether or not to cut interest rates. But there's a pretty big catch, one that could change absolutely everything. And that really gets to the heart of the problem, right? How do you make a monumental call that's going to affect the entire economy? We're talking everything from your mortgage rate to the job market, when you're basically flying blind. Let's dive into why they're in this spot. Okay, so let's set the scene. The Federal Open Market Committee, the FOMC, they're getting together on December 9th and 10th. Now, normally, they'd walk into that room with a mountain of economic data to help guide their thinking. But this time, nope, they're staring into a whole lot of uncertainty. And look, this isn't just outside analysts saying this is a tough spot. The people in the room are saying it. Fed Governor Michael Barr himself came right out and said that these data delays have made their job a whole lot more challenging. So, what is this evidence gap we're talking about? I mean, why is the group in charge of steering the entire U.S. economy suddenly missing its most important navigation tools? Well, it all comes down to the recent federal government shutdown. Because everything was on pause, the Bureau of Labor Statistics couldn't gather its data. And that means they won't be releasing two of the absolute most critical economic reports, the October Jobs Report and the October Consumer Price Index, which is, our main gauge for inflation. And this is where the timing gets really tricky. The shutdown stops the data collection. The Fed has its non-negotiable meeting on December 9th and 10th, but the data they desperately need to make a smart decision, that's not coming out until December 18th, a full week after their decision is already locked in. It's kind of crazy. Now, even with all this official data missing, you've got a group inside the Fed that's saying, hey, we've seen enough from other sources. We need to act now. Let's call them Team Cut. And they argue that waiting is actually the bigger risk here. And they're not being subtle about it at all. Fed Governor Christopher Waller has been incredibly direct, just stating it plainly. I'm advocating for a rate cut. That is a really strong and public statement to make right before a huge policy meeting. So the argument from Team Cut pretty much boils down to this. Governor Waller says, look, the private sector data we do have points to a weak labor market, and I'm just not worried about inflation right now. New York Fed President John Williams seems to be on a similar page, calling current policy modestly restrictive and hinting there's room for a further adjustment. For them, the clues they have are enough to make the call. But of course, it's not that simple. Not everyone at the Fed is on board with that. On the other side of this whole debate, you have Team Pause, officials who are pumping the brakes, urging caution, and saying it's way better to just wait for the smoke to clear. And the main voice for that other side comes from Boston Fed President Susan Collins. She's basically the counterpoint here. Her view is that the Fed's policy is appropriate for now. That's a clear signal that she's in favor of a wait-and-see approach. So the whole case for hitting pause is really rooted in caution. Collins is basically saying it's impossible to know how much the labor market has really softened without those official government numbers. She even points back to the September data, a last good report we got, saying it gives reasons to be hesitant. For this group, making a big move on incomplete info is a risk that's just not worth taking. Okay, so let's put it all side by side, because this is really the core of the conflict. You've got Team Cut looking at private data and saying the signs are there, let's act. And then you have Team Pause looking at the lack of official data and saying, whoa, let's wait for the real numbers. It's a classic showdown between acting on the early signals versus waiting for absolute confirmation. So with the committee so clearly split and the stakes so incredibly high, the outcome of this December meeting is really anybody's guess. What are the potential paths forward from here? The division is so sharp that some analysts are actually floating the idea of a historic tie in the vote. Now, that would be very rare, but the fact that it's even part of the conversation just shows you how tense and divided this decision really is. And get this, even if they manage to muddle through the December meeting, the challenge is far from over. As Governor Waller himself points out, January is going to be even trickier. Why? Because suddenly they're going to get a massive data dump. All the delayed info is going to hit at once. And trying to make sense of that flood of numbers, that's going to be a whole new kind of headache. What all of this really points to is that the era of the Fed giving us clear long-term guidance, well, that might be over for a little while. Instead, it looks like we're heading into a meeting-by-meeting phase, where big decisions are just made one at a time as new information finally starts to trickle in. And that brings us right back to the central question, the real dilemma at the heart of all this. When you're flying blind in an uncertain economy, what's the greater danger? Is it acting too soon on incomplete information and maybe getting it wrong? Or is it not acting at all and just waiting for clarity while the economy could be drifting off course? The Fed's answer is going to shape all of our wallets for months to come.